Hi there, this is Dr. Sami Garas, and in this video, I'm going to talk to you about the auditing cycle for inventories and cost of goods sold. If you remember, so far we covered two cycles. The first one about cash and financial instruments. The second one about accounts receivable, notes receivable, and revenue. And in this video, we will start talking about the third cycle. And mainly we will talk about the functions used in the inventory and the cost of goods sold. Then we talk about the accounts involved, the errors and fraud that might happen in this cycle. And finally, how can we make test of control and substantive procedures, which we put it under the big umbrella of auditing procedures. If you remember, those was the same key points I discussed them in the revenue cycle. So now we go through them from the other side, which is the inventory and cost of goods sold. In the inventory and cost of goods sold cycle, we have process usually starts by any employee in any department who is keen to buy some materials or products, where they send a purchasing requisition to the purchasing department. And this will be the first document that you need to be aware of in the auditing class. Who is issuing the purchasing requisition and by whom is received? It's issued by the employee who is in need, and it's received by the purchasing department. Usually the employee will mention the quantity and the item description required to be purchased, but the employee doesn't care about the price because it's the job of the purchasing department to buy the item at a reasonable price. Then we will go through the other functions using the flow chart. And here I'm just putting a screenshot about the symbols that you will see it in the coming slides. For example, this one, it's a symbol of document. This is a document with multiple copies. Here, electronic output, electronic data entry, and you will see that this symbol is repeated a lot. Here, input and output. So here they are separated, but here they are together. The processing, if we have rectangle, it's computer processing. If we have this shape, it's manual processing. Then we have the cylinder for the database, the magnetic tape, the reverse triangle, it's the paper document file, and you will see this symbol repeated a lot, and the parallelogram for journal ledger, and then the other symbols for flow and miscellaneous symbol. So here we have the input, where usually we get the purchasing requisition made by the employee based on the items required to be purchased. So here we have the input of purchase details. Then here, if you remember, this symbol for preparing the pre-number purchase requisition on the computer, and then we get the purchase requisition. The original will go to the purchasing department to place the order. One copy will go to the accounts payable so it can be filed with the invoice when we receive it. The other one will be filed in the department who is requiring the item. Then once the purchasing department acquires the requisition, they send a request for quotation so they can get the best price from the supplier. And based on that, the purchasing department will make a purchase order. The purchase order here, it's made by the purchasing department to the selected supplier. So the originating department will make the purchasing requisition, which is entered on the computer automatically. And then we get the purchase order. The original will go to the selected vendor. One copy will go to the accounts payable so it can be attached to the purchasing requisition. One will go to the receiving department to monitor the delivery time and the quantity of the item. One will go to the original department to ensure that the item requested has been ordered. And one will be kept on file for the purchasing department to be matched with the requisition. Then once the supplier prepared the product, The supplier will send it to the receiving department. And as you can remember from the previous slide, that the receiving department has already a purchase order on hand. So the receiving department will count all the items and enter them on the system. So here the purchasing blind copy of the purchase order, and then the receiving department will count the goods, match them with the purchase order, prepare the receiving report, and based on that, we have the receiving report. The original copy will go to the accounts payable. So now you can tell that in the accounts payable, we have purchase requisition, purchase order, receiving report, and then one copy to the purchasing department to verify that the item that has been ordered was delivered. And then the originating department also with good to show them that the item has been requested, has been received as well. And then we make here a match, like from the receiving report with the other document. Then we make a match here between the purchasing requisition, purchasing order, receiving report, and invoice. And on top of those 4 documents, we create a voucher. The voucher has a summary of the item that has been requested, ordered, and received. And then we compare the quantities and the prices to make sure that they are identical. Then we enter the voucher on the register. So the original voucher here will be kept on file for the cash payment. And then the voucher will have the invoice of the supplier, the receiving report, the purchase order, and the requisition. And this is very essential in auditing, that whatever we requested from the beginning goes all the way through to the invoice with the same quantity. And here is an exercise. You will see it in the blackboard. I will skip it. And here is the answers. And now let us go to the other part. Here we have the receiving report, as I said, receiving the items. And it goes to the warehouse. And the goods moved from the receiving department to the warehouse to make sure that there is no manipulation with the quantity received, and the inventory records are updated. Then we have here the goods from the receiving will be entered manually, on computer to update the inventory. From the other hand, the production department will have the raw material requisition because they will take it for production. And then we prepare the goods in production and match what we received with what has been received in the production department and make sure they are identical. And this will update the inventory record. And then the warehouse will send it to the production area. And here we have the raw material requisition document that has been entered on the computer. And we have the cost accounting where we calculate the material, labor, and factory overhead of the production. And once we finish the production, then we need to update 2 databases. The first one is the cost accounting records. The second one, the finished goods before we send them to the customers. And here it goes to the customers. And we get the sales order from the customer, prepare the multiple part bill of lading. And then we have the bill of lading here has the original will go to the customer. Then also one copy where the customer can sign that he received the original with the quantity. One copy will be filed in the bill of lading folder. And then another copy with the sales order will be recorded together. And here is another exercise. And here is also the answer for the questions. The last point in this video is the function. If you remember, we said that we need to go through the process and then we see the functions. What do you mean by the functions? I mean, first we place the purchase order, and the documents in the purchase order step is the purchasing requisition that has been made by the department in need, the purchase order which is made by purchasing department. And then once we receive the raw material, we enter it on the system, and we issue receiving report document along with the vendor invoices. And then we put the materials in storage in the warehouse. And here we have the raw material inventory master file. Then we take the material into production area, and we have raw material requisition, cost of goods sold, or cost accounting. And then we store it up in the warehouse once we finish the production. And we have the finished goods perpetual inventory and cost accounting. And finally, we ship the goods to the customer, where we have the bill of lading, we have the finished goods record updated, and the invoice to the customers. I hope you find this short video useful to give you an idea about all the functions that are used in inventory and cost of goods sold cycle. And I will complete my discussion on this topic in another video. Thank you. Bye-bye.